Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast. Carol Massar, Tim Stenovec. We welcome in our audiences across Bloomberg Television, radio, and YouTube to really parse what, Carol, is going to look like another really volatile day. I mean, we basically opened unchanged on the S&P. We moved lower early, and then you had that huge bid come in around lunchtime that sent us up almost 2%, and right now we're back in the red, down about 0.7%.
Yeah, it feels like several different market days all in one day. I'm just looking at the swings. 4% swing on the NASDAQ 100, about a 3% swing on the S&P from peak to trough, and take a look at some of the commodities. WTI, a 10.5% swing. I mean, Tim, it has been all over the place today.
Yeah, and investors couldn't make up their minds whether to buy or sell. The S&P 500 moved between gains and losses at least 9 times so far today.
The whipsawing continues. I'm looking at volumes, significant. 42% higher on the S&P 500 versus your 20-day average, 50% higher on the Dow. Whatever people are doing, they're doing it in spades and they're coming to trade.
And it seems just the volatility that we talked not only about the equity market, but when you go across asset, we talked a lot for our radio audience here on TV about renewed dollar strength, the likes of which you haven't seen in almost 2 years, and remains sort of this yields higher. We're back up now on a 2-year yield to 162. So we've surpassed where we were pretty much a month ago, going back to what I think December 2019 levels.
And of course, a lot of this ties into the commodity space here. Of course, the surge that we saw earlier today in WTI crude, which flirted with $130 a barrel. Some one point you saw wheat at a record high, and of course, just an absolutely stunning day for nickel here, more than doubling at one point to $100,000 a ton before the LME decided to suspend trading and nullify most of those trades and basically shut down until at least March 11th in order to sort everything out. Let's sort out what's happening here in the equity markets. Here in the United States, the Dow Jones Industrial Average down about 0.6% on the day, or 186 points. The S&P going to close lower by about 0.7% or 30 points. Remember, this is after being higher by about 1.8% here on the day. As far as the NASDAQ composite, another interesting day for the NASDAQ. Is going to finish the lower only by about 0.3%, but it was higher by about 2.5% on the day. And the outperformer on the day, at least on a relative basis here, remains the Russell 2000. The Russell 2000 had held in the green for a good portion of the day. It opened in the green. It stayed in the green. It was as high as 2.7% here on the day, but it's going to finish the day closing up about 0.6%.
Yeah, number one performer in the S&P 500, Enphase Energy. That is a name that we have talked about a lot over the last couple of weeks. Still down on the year, but again, another big bump. A lot of those energy names continuing to see momentum, Taylor.
Oh, Carol, don't steal my thunder.
Sorry.
Because that is what I've been talking about. It's unbelievable. The energy sector, Carol, it's a 40% year to date. Now, that's on sort of when we think about just the immediate sub-levels of where we are in the S&P. Here I show you for our radio audience, as we do every day, the winners and the losers going down an additional level on that. The energy sector, it's still up an additional 1.4% on the day. Just unbelievable. Followed by, what, semiconductors and some of the auto components as well. As you're thinking about the ramifications of potentially all of these, maybe further chip shortages and higher input costs coming down on the horizon. Take a look at where we are on the bottom, on the right of the screen. Otherwise, Carol, it actually looks pretty defensive. That's the rotation out. It's household products, it's food and beverage, it's household equipment products. You're really seeing with some of these hardware and some of these costs that are coming in, that's what's weighing on this portion of the market. You're off about 3% or so.
All right, in terms of gainers in today's session, I do want to talk about some of the airline names and travel stocks. We did see some bounce backs thanks to some updates from Alaska Air and Booking.com that were better than what investors were anticipating. I'm just going to single out one, Alaska Air Group. They were up about 6.8%. They do expect capacity to be down in the first half of this year because of those rising fuel costs, but they also say they continue to see strong demand for spring break and summer travel. They still expect to return to its full pre-pandemic levels of capacity this summer. So a little bit of a blip higher there. I had to talk about U.S. Well Services. I feel like this is a Romaine type of stock. Microcap oil and services company. It's on pace, or was on pace, for its 7th gain. This stock was up as much as 90%.
You almost had me.
Hey, listen, a few minutes ago, or was it like 20 minutes ago, it was up higher. There was so much volatility.
Blink and you miss in this market.
12% of it, the float is shorted. Maybe that explains some of the profit, the volatility.
But I'm glad you bring it up. I mean,
Why?
because all its peers, NVO, they're still higher on the day. I mean, everyone's speculating now that there's got to be some increase in U.S. Crude production at some point.
Yeah, and I just want to mention exactly, right? We've seen investors moving into the space because of what's been going on in the energy markets. Do you want to mention Wolf, Petco Health and Wellness was up about 8%.
Hey, we interviewed them earlier.
Yeah, we did too.
Yeah.
Carol, do you know we have a new mascot on our program?
What's your new mascot?
Yenzi,
It's not my
Romaine's new dog.
Really?
Co-mascot.
Yeah, apparently they're really cheap at the moment, dogs, and all their food. I've heard the inflationary pressure is minimal there.
Yeah, supply and demand.
Well, all I know is we're all spending a lot on our pups because they did well for the last quarter, and they also raised their outlook for the year. It's time for Tim to get another pet.
Yeah, it is.
No, it's not. He has a child. We've decided that already.
Exactly.
Too much.
Caroline knows what I'm talking about. Let's talk about some of the decliners today. Consumer staples, as we mentioned, under pressure today as oil prices climbed, wheat prices bounced all over the place, food input costs go up. ConAgra, the second worst performer in the S&P 500 on a percentage basis. Romaine, you took us through a little earlier on why it was lower. Also downgraded to equal weight from overweight at Consumer Edge, citing those rising food and
And it's
input
all those
cost
staples.
volatility.
ConAgra,
It is,
Campbell,
Campbell Soup.
McCormick.
Yeah.
You go through the biggest decliners today. General Mills, all in that space.
Yeah, look, it absolutely makes sense as those input costs go up and the company sees margin pressure. And also, what kind of pricing power do they have in terms of for consumers? I wanted to check in on Mandiant because Google did say today that it would buy the company for $5.4 billion, but this was priced into the stock yesterday. We saw shares rise 16% after the information reported that this deal was going to happen. Still, though, down about 2% on the day today. And Apple, keeping an eye on Apple, down by 1.2%. The Peak Performance Special Event, the virtual event, happened today. A couple new products, no big surprises. An upgrade to the iPhone SE, the M1 chip in there.
Did you
5G
call that a
phone.
snooze?
I didn't say snooze.
Okay.
I think you heard it though, because maybe that's what you thought.
Yeah.
But you know, when Mark Gurman is one of your colleagues,
I know.
there are no surprises at Apple events anymore.
That's true.
So true. And also how to make headlines in this particular market at the moment. I mean, we saw all the women ringing the bell at the close. International Women's Day, we wear our ribbons, but really we've been talking about much more what's confronting the market right here, right now. But we need credit where credit's due. This is International Women's Day. There was an Apple announcement. There is other things going on under the hood. But I take you back to what is just front and center for everyone, the volatility in the commodities space, the fact that Russia and Ukraine is just upending our view on where global growth is going to be going and where supply chains are going to be the headaches. Gas oil up 20% on the day, heating oil up some 13%. Here is where the impact is for the consumer. Here is where the Federal Reserve, the ECB, as soon as this week, they're going to have to weigh in. Brent crude grinds higher, 5% higher, $128. WTI crude, $125, let's call it, up another 4.6%, as we know that the US makes that stance, works with the United Kingdom to put a ban on Russian energy. I look across to not even there are the soft commodities stories, which of course we've got to talk about what's happening with wheat. We've also got to talk about what happened with gold, the flight to a safety, the stagflation hedge, not to mention what happened with nickel. And I'm looking at an FX market that actually saw the euro up 0.5%. Big story. Again, we hardly had time to pay attention to it. But the fact that the EU are going to be jointly spending, once again, issuing debt to be able to strengthen up their overall economy, to be able to spend more on defense. And I'm looking at a search for safety, no more in the bond market. Yields push higher in Germany, Austria, Netherlands, and the like.
Yeah, as the trickle effects come out, more companies bumble the latest saying they're discontinuing their operations in Russia. We'd mentioned this earlier. Sorry to throw the control room off guard, that Russia and Ukraine was about 3 to 4% of some of their revenue. So that is, of course, sort of the backdrop of this story here, which is yields higher, which take a look at this. You know, we're back up to about a 161, Tim, on 2-year yields, up 6 basis points. We're going back to the highs that we had way before a month ago, way before COVID, December 2019 levels. So you're really starting to get all of these inflation break-evens at record highs. Yields are following higher.
Yeah, I want to go back to Bumble. I'm keeping an eye on shares of Bumble. It's moving in after hours higher by about 5.5%. A lot of the Russia risk was priced in recent days, as analysts have pointed out, that the company's ownership of Baidu represents a risk to the company's top line and bottom line as well. The company did say it's removing apps from the Apple Google stores in Russia and Belarus. The company, though, did say it sees fiscal year 2022 adjusted EBITDA margin of 26.5 to 27%. The company sees revenue for 2022 revenue between $934 to $944 million. Estimates were for $939.2 million. First quarter revenue forecast missing those estimates. I got to tell you, though, Bumble shares under serious pressure since the company went public, down about 80% from record highs about a year ago.
All right, I'm calling an audible. Sorry, I'm going to add on to Taylor saying sorry, control room, because Stitch Fix is also down almost 19% here in the after hours. This company coming out with their earnings as well. Third quarter adjusted EBITDA loss. They're talking about the outlook, 25 to 30 million. That looks like a smaller loss. Third quarter net revenue, 45 to 500. That is a light number. So that stock certainly seeing a bunch of selling in the after hours. It hit a 52-week low in today's session, and it was down 42% prior to this release, Taylor.
And I'll do a little correction. I'd said that analysts had been looking at top line revenue from Ukraine and Russia to be about 3 to 4%. We are now hearing from Bumble that total revenue from Russia, Ukraine, and Belarus was about 2.8% in 2021. So relatively small, but that's starting to put some numbers as we think about other big companies as well, like Pepsi, like Coca-Cola, et cetera, Tim, to really understand how this is going to weigh not only on the income statement, but also the balance sheet as well if you're looking at some write-downs.
There's also the risk to employees, though, and the engineers that the company has based in Russia and Belarus and other areas of that world, and the disruption that's caused by this terrible war.
That is what we're going to be talking about exactly on our Triple Take today. Great to be able to tune in on what is a focus on the human cost here, and also some of the talent that we were so used to depending upon from Ukraine, from Russia.
Yeah, we learned so much, right, as a result of this, how much we rely on Ukraine and Russia as well. All right, that's going to do it. You guys are going to continue on Triple Take. That will do it, though, for our cross-platform coverage on radio and TV and YouTube. We'll see you again, same time, same place tomorrow.